of the two series of programs on GST IT returns and practice. Yesterday you have wonderful section on GST 1, 4 and other related concepts. Today also we are going to, sir is going to deal with GST 3B, 2A and 2B. This is very important topic. And sir has reduced the job of your principals to maximum extent because you will take up work without any training from your principals and take up the client's work. Thank you for that, sir. And without waste of time, we'll start the program. Over to you, sir.
Yeah, thank you so much, ma'am. Hello, everyone. Very good evening, my dear friends. So today it's time to discuss about another very interesting area and important topic. That's something which is most practical area, and undoubtedly they are talking about something important known as GSTR 3B, where we have got so many practical issues involved there, where we'll talk some interesting areas there in GSTR 3B as to what are the elements in GSTR 3B, how do we take the figures from 2A, how do we take the figures from 2B. Everything we'll talk in detail, especially related to GSTR 3B, my dear friends. So in the previous session, yesterday's lecture, we have spent some good time on discussion about GSTR 1 and the intricate aspects involved in GSTR 1. But here, today, we'll talk about a lot of interesting points related to GSTR 3B. Of course, here we do not have any offline utility as such. Entire details will directly fill online itself, and compared to GSTR 1, GSTR 3B is a simpler form. But still, even though the form is simple, content is very critical. So it's always important that just because form is simple, we cannot relax. There is some tremendous content in GSTR 3B also, which will focus and learn very clearly there. And any doubts, I'm always there for your support. In the course of discussion, every doubt will clarify. Don't worry. So before I proceed, first, let me share the file with all of you guys. I'm sure you guys are enjoying with that presentation, getting some in-depth knowledge about every column in that GST return, because the whole idea of giving that presentation to you is very clear that every column in the GST return should be clear for all of you guys. That's the whole idea there with which we have prepared this presentation. Clear? So shall we proceed, my dear friends? Right, come on. So we have got some good points to talk today, especially in terms of GSTR 3B, utilization of input tax credit. What are the columns in GSTR 3B? Even though number of tables are less, we have got some good point to talk in GSTR 3B. What is that? Let's start the discussion. And before I start, a couple of friends are constantly asking me, sir, please share the PPT file in the group and add in the group. Don't worry, my dear friends, that our branch department will take care. So don't worry at all. We will add in that particular group. Ma'am, please do take care of that. Adding the students in the group, please. Sure. Come on. Let's proceed now and start the discussions, guys. Are we all ready? Perfect. Come on. Let's proceed. So let me share my screen first and open the presentation. Friends, is the screen visible for all of you? Can you please respond somebody so that I can proceed my discussions? Yes, perfect. Thank you so very much. Thank you. Thank you. Yeah. So today's agenda of discussion is all about GSTR 2A, GSTR 2B, and GSTR 3B. First of all, what is the difference between these three forms? And first, definitely I'm going to spend a lot of time with you guys on discussion about GSTR 2A and GSTR 2B. Then I'll talk about GSTR 3B, because it is utmost important to have a clarity of thought on what is the actual difference between 2A and 2B. Of course, in overview of GST returns first today's session, we discussed what is the small fundamental difference there, but complete detailed discussion we will do today in this particular session on what is the actual exact difference between GSTR 2A and GSTR 2B. The reason being very clear that whatever data is covered in 2A will be covered in 2B, but it's not necessary that every data there in 2A will be covered in 2B, because we know one wonderful statement that 2A is a dynamic statement, but 2B is a static statement. So for example, if you remember, first basic fundamental point, let me make you recollect what we have discussed, and that basic fundamental point I'll explain you once again, then only I'll start the further discussions here. Yeah, so let's once recall the basic fundamental point, what we already covered, my dear friends. Concentrate now. So the basic fundamental point, what we discussed is that there is one supplier and there is one recipient. Now, supplier will obviously file GSTR1, which is nothing but statement of outward supplies. And that details what he reported in GSTR1 will auto-populate. What is our language, my dear friends? It will auto-populate. Name only says auto-populate. Auto-populate means it is automatically generated. It's not prepared by somebody. It is automatically generated. It will auto-populate in form GSTR 2A and 2B. The small difference is that 2 lines I'll write here. With these 2 lines, the whole story should be clear. Number 1, if GSTR 1 is filed within due date, and by the way, what is the due date? The due date could be 11th or it could be 13th, 11th in normal circumstance, 13 in case of QRMP IFF case, or also in case of where return is filed on quarterly basis. If you remember, we discussed already that in case where turnover does not exceed 1.5 crores, they can file the GSTR1 on quarterly basis instead of monthly basis. And when I say it is quarterly basis, the due date is 13th of the month following the end of quarter. Clear? So if the GSTR1 is filed within the due date, then the point is very clear that credit is reflected in 2A and 2B. So that details which are shown in GSTR1 will reflect in both 2A as well as 2B. But by any chance, if GSTR1 is filed after due date, then what will happen? Straight point, my dear friends. If GSTR1 is filed after the due date, the point to be noted is that credit will reflect in 2A and not 2B. So in simple terms, whatever details are there where that supplier has filed his GSTR1 within the due date. If supplier has filed his GSTR1 within the due date, then the credit will reflect in both 2A as well as 2B. But if GSTR1 is filed after the due date, it will reflect only in 2A but not in 2B. But the importance of 2A, 2B, there is some great importance for 2A and 2B, my dear friends. Now, what is that importance for 2A and 2B? Let me tell you, because every month, this return, what we are talking about, GSTR 3B, which is a monthly summary return. We call it as a summary return because we do not show any invoice-wise details there. Just lump sum total figures is what we will report in GSTR 3B. And I always call it as summary return because we don't show any breakup. Just that the lump sum figures will put that in GSTR 3B of both output as well as input. What are the columns in GSTR 3B? Every column will talk in detail. Don't worry at all. Now, in 3B summary return, when I'm talking about claiming input tax credit, now what they are specified is that there is one interesting rule in the law known as Rule 36(4). And as per that rule, what is the credit that we can claim is only 120% of credit reflecting in GSTR 2A. That means we can't take credit more than 120% of credit reflecting in fact, it's not 2A, it is 2B. We look at 2B and of which we can take only 120%. And later on, this 110%, 120% has been reduced to 110%. I already told this point to you, but I'm repeating again so that you'll recollect this point. And I also told you that this 110% has recently become 105%. In January 2021, they reduced this 110% to 105%. So what credit we can claim as per law, strictly speaking, is only 105% of credit reflecting in 2B. So in short, what is happening is that even though we are eligible to claim the credit, even though we have satisfied the conditions, even though we have got invoice, even though we have paid tax, still we are not able to take full credit because supplier has failed to file GSTR1, or supplier would have filed GSTR1 but he has missed showing our invoice. Now, whatever circumstance it is, we cannot take credit. Now, if you ask me, so practically are we following this? Answer is no. Many of the clients, they are doing whatever they want to do. They are following their books and taking their actual credit as per books only. So they are doing as per their comfort. But as per law, this is the concept. And I'll also show you that in GSTR 3B, when we are filing this GSTR 3B, what happens is that if credit claimed is greater than 105% of 2B, then automatically what is happening is, my dear friends, what is happening very clearly is that that box is turning into red color. So it's something like they are showing a red flag. Boss, get ready. You are claiming credit more than 105%. Please be prepared. There is a high possibility that tomorrow GST department might come and issue a notice to you. Like that, they are showing a red flag there. If the box is turning out into red color, how is it? I'll discuss that with you. I'll show you that we have got screenshots for every column, like how in GSTR1 every column we have got screenshot. Here also for 3B every column I brought screenshots there. Don't worry, we'll talk it. Yeah. So 1-2 questions from our friends. First question, sir, why did they introduce 2B? What is the purpose? I already told you to calculate that 110%, 120%, and now 105%. We have to look at 2B only, but not 2A. And we already have 2A. 2A is still in force, but the purpose of 2A is basically to check our overall credits. But for that month, what I should take? I should look at 2B. That is a difference there. Then, sir, in that case, how is it fair to the recipient? It's not at all fair. That's what I'm also trying to say. That is not at all fair. But we have no option where you have to understand that it's not fair. But as per law, that's a provision what they have brought. Clear? And this 105% story amendment has come up with effect from January 2021. And it's happening also. It's showing red in color. And one more crazy point, if I tell you now, you will be completely surprised. Now listen to that. What is that crazy point? Listen. What has happened is that in the budget 2021, the recent this year budget, where this 2021 budget, which was the first paperless budget because of corona restrictions, what has happened is that they introduced one provision known as 16.2 clause AA, where they have specified that credit can be claimed by recipient. Credit can be claimed by recipient only if credit can be claimed by recipient only if supplier filed GSTR1. In fact, the meaning of this point is that recipient can claim credit only when supplier has filed GSTR1 within the due date. So after this budget amendment, there is no question of 110%. There is no question of 105%. What you should take is only credit, whatever is there in 2B. That's all. As per this budget amendment, you should not take credit more than what is reflecting in 2B. But one point to be noted is that any amendment made by budget, any amendment made by Finance Act with respect to GST, I mean indirect tax laws, will come into force only from a date when it is notified. By virtue of a notification, they will bring a notification stating that this amendment will come into force from so and so effective date. And so far it has not happened. That is the reason why we are claiming 120%, 130%. Some clients are taking as per books, which is no way comparable with 2A and 2B. They are doing that. But one point I will tell you very clearly is that if I look at 3B now, if I open GSTR 3B of any particular client, automatically ITC figure will reflect there. And that ITC figure reflecting automatically in that 3B is as per GSTR 2B only. Whatever suppliers have filed GSTR 1 within the due date, whatever credit is reflecting in 2B, that is automatically coming in ITC column in GSTR 3B. This is a very important point to be noted. So in future, there is a high possibility that GST department will come up and the government will come up and say, boss, Take credit whatever is there in 2B. Don't take 1 rupee also more than that. Again, one doubt can come by student, sir, is it fair? Of course, it's not fair. I do accept, but what can be done? That's a provision like that which you have to follow. Then you have to start chasing your suppliers, telling that, boss, come on, file your return, file your return. I want my credit. I definitely want my credit. No compromise. File within the due date. And nowadays, I've seen a lot of cases where recipients are telling suppliers, telling that whatever payment I have to give to you, I will not give you unless you file GST within the due date. You file GST within the due date, then only whatever payment I should give you, I will give you. If not, I will hold your payment. Like that, recipients are telling suppliers because credit issues are coming. This is not a small amount. It's a very big amount where credit can get blocked. Next, 1-2 question from friends. Sir, in case of refund of ITC for zero rated supplies, good. Zero rated supply covers 2 things: exports, supply to SEZ. Can we take 2A as basis or 2B? We always take 2A as basis. 2B story is only for the purpose of monthly availment of credit while filing GSTR 3B. So you need not look at 2B, you can look at 2A, no problem. Next, what happens if recipient books input credit in books but no return filed by supplier? Is it required to reverse credit entries in books of accounts? That's what I told you, my dear friend, that in case where recipient is having credit as per books, but supplier did not file GSTR1. That means if supplier has not filed GSTR1, it is not reflecting into A, not reflecting into B. Should you take credit? As per law, answer is no. But practically, are people taking? Yes. Yes. Now, if you ask me when I should take, sir, actually as per law, whenever it's reflecting in 2B, when it reflects in 2B, in which month they file the return, GSTR1, that it will reflect. That time only I should take. Next, another question. After taking value as per books, if government catches us, what is the penalty on the same? As on today's date, there is no penalty which is being charged, even though we are claiming credit more than 2A and 2B. Still, government is not catching us and imposing any penalty on that. But in the long run, there is a high possibility that they'll come and catch us. And so far, there is no specific penalty provision for this. But we do have a general penalty provision in GST section 125, where the general penalty is 25,000 under CGST, 25,000 under GST. So there's a high possibility in the long run penalty can come. And a new provision may be introduced for higher penalties also. Next, another question. So for example, ITC showing in 2A is 1,50,000 and in 2B is 1,30,000. So as per rule, I can claim ITC of 130. So what about balance 20,000? That balance 20,000 you take in next month. Now in this month it is coming in 2A but not in 2B. What does that actually mean? See, for example, let's say for a second, for the month of May 21, we should file the return by 11th June. Correct? Now, what has happened? Supplier, one supplier, this particular person, one supplier, he filed on 14th June. Now, this 11th June credit will reflect in 2B of May month only. Don't worry. In 2B of May month, you can see this credit. But whatever is filed on 14th June, one point you have to understand is that credit will reflect in 2B of June month. It is not that the credit is gone. So whatever question you asked, so what about balance 20,000 unclaimed credit? It is not that 20,000 credit is gone. 20,000 you can still take credit, but you will take in next month. It's only deferral. Timing difference is happening there. But of course, even though 1 month gone, still it is very costly because today rupee, tomorrow rupee is not the same. There is definitely some importance for time value of money. That is a bigger problem what we are having. Opportunity cost. Then one question from our friend. What will be the consequences of red alert message in 3B if we claim more than the value reflected in it, even though we are in possession of valid invoice? I already told you that red alert is coming. Even though red alert is coming, people are still going ahead and filing it and taking credit. And so far today, practically no action is being taken by department. But in the longer run, there's a high possibility they'll come back and tell you have claimed excess credit, please reverse it, pay interest, pay penalty. All this consequences may come in the future. But as on today's date, it's not happening. I'm sure we are clear. Good. Another question. How to reconcile bill to bill in year end? That reconciliation has to be done. For that, you have to learn Excel. Simple. You download the Excel data, prepare pivots, do the reconciliation, and start verification of each and every invoices. Prepare pivot tables and cross-verify your invoices. That's the only option what we have. Even Shivateja does the same thing. I download the data in Excel and do VLOOKUP wherever required, and wherever required, I use pivot tables and start comparison. And now don't tell me you don't know pivots and VLOOKUPs. That's mandatory thing, being a chartered accountant, a student or a chartered accountant. Next question. Sir, while doing tax audits and GST audit, there are a lot of issues with respect to excess claim of ITC under GST. Can you suggest any remedy for auditors to eliminate risk of sending the audit report? As in practical scenario, client will not be interested if he aim to pay such excess ITC. One point is very clear, my dear friend, that anyways, tomorrow when I talk about 990 annual return, where we will sign the audit report, I'll still tell you that, but still, since you asked, I'll tell you that in case where client has taken excess credit than what is eligible, safe side as a chartered accountant, as an auditor, since you are signing the audit report, we actually tell the client to pay. But I agree to your point that client may not be interested to pay. Then to protect your skin, we always recommend that write and vote. In auditor's observation, please write that observation. We are not qualifying anything. We are not telling that he is wrong, but we are just writing our observation that so and so credit has been claimed in excess. And if client is telling, if you write all that, I will not get audit done from you, then don't do audit then. For the sake of client comfort, we cannot relax some point and some mistake which is there in that particular books of accounts. Because as a chartered accountant, since we are signing the audit report, it is as much important as to protect our skin. We cannot afford to leave it just like that. We have to protect our skin. Tomorrow, any problems come, who is answerable? Yeah, done. Next. Yeah, so many questions are coming. Good. Next question. Sir, 2B considered till 11th or 13th? 13th, no doubt about it. 2B will come on 14th only because of QRLP IFF. Then, sir, when ITC is showing in 2A, then why government don't allow us to claim ITC as per 2A? The logic is simple that even though it is reflecting in 2A, but not in 2B, that means supplier did not file within the due date. If supplier is not filing within the due date, government is telling recipient, you don't take credit this month, you take it next month. So in short, government is telling we are trying to pinch you. So you please pinch supplier in return. So government is troubling recipient so that recipient will in turn trouble supplier. Like on chain, they are trying to rotate the story. That's the whole point. Even in income tax also for that matter, if the TDS credit is not reflecting in Form 26AS, are we taking credit, my dear friends? No. What we do, we always call our director telling boss, you revise your TDS return. I want the TDS credit to reflect in Form 26AS. I want my credit at any cost. Are we doing that or not? Yes. So the same thing government is also telling here also. Recipient, please follow up with your supplier. Next point. Oh, so many questions are flowing. Okay, I'll finish off the questions. Is it differentiating while taking from GST normal till 11th and IFF client 13th by 2B? Normal client also till 13th file GSTR1 also will come in 2B, right? No. Logic is simple. The only logic is that normal client we has to file GSTR1 by 11th of next month. So that's where in simple terms I told you, if GSTR1 is filed within the due date, then only credit will come in 2B. If not, it will come in 2A, but not in 2B. I clearly told that to you. Yeah. Brilliant. So many questions. Brilliant. So happy for that. Nice. So can I proceed, guys? A lot of interesting points we covered there related to 2A, 2B, but we have got so many special points to talk by discussing in our slides. What is that? We'll talk in detail now. I'll move forward. Yeah, done. Thank you so much. So let me share the presentation once and start the discussion from the presentation. Yeah, see that please. So today's discussion agenda 2A, 2B and 3B. Of course, we already started 2A, 2B discussion. A lot of points we covered there. Let's start. The first thing, 2A, as I told you, it's a view only dynamic document. Of course, it is a view only because there is nothing what you can change there. But why did I say it's a dynamic document? Because it keeps changing on a daily basis. As and when supplier files GSTR1, the 2A figures will start changing automatically. That's why we always say 2A is a dynamic statement. 2B is a static statement. Static because it's fixed. It won't change. See that? GSTR2A is a purchase-related dynamic tax return that is automatically generated for each business by the GST portal. Where a taxpayer files his GSTR1, information is captured in GSTR2A of the recipient of such goods and services. It takes information of goods and services which have been purchased in the given month from the seller's GSTR1. As a GST registered buyer, you may refer to GSTR2A for input tax credit details. Now see right side, GSTR2A will be auto-populated from following returns of the sellers or counterparties. What are the returns? GSTR1, the normal return, statement of outward supplies. GSTR5, we know that GSTR5 is filed by NRTP. Remember that? NRTP, we discussed that. NRTP is somebody who is a foreign guy who has come to India to do business for temporary period. And the registration is valid for period specified in the application of 90 days, whichever is earlier, which can be further extended for another maximum 90 days. And this NRTP or CTP guys should take registration at least 5 days prior to commencement of business. We discussed that point. Then GSTR6, ISD, input service distributor. They are such category of persons who can distribute credit of tax paid on input services. So that also will reflect in GSTR2A. Then GSTR7, person liable to deduct tax at source. GSTR8, e-commerce operators. Already we discussed that provisions of TDS will come into picture, and as on today, they are applicable only to Department of Central Government, State Government, Local Authority, Public Sector Undertaking, or any society established by Central or State Government. And that too, TDS provisions will come into picture only when the contract value is more than 2.5 lakhs. But in TCS, there is nothing called 2.5 lakhs. TCS will come into picture when there is a supplier who is supplying some goods or services through an e-commerce operator, and the consideration for that goods or service is collected by e-commerce operator. Classic example, Swiggy, Zomato, Amazon, Flipkart. Where are all e-commerce operators who supply goods or services on their platform which are belonging to some other suppliers. Next point. You can see the columns, guys. So a couple of our clients, we have taken the auto-populated data there. So GSTR2A auto-drafted details. You can see the columns there. First, you have got two options. One, view. Second, download. So you can see the download arrow mark. If you click that download, there's an option called generate Excel file to download. You can download the Excel file and see the complete content there through Excel option. Other option is view. When you click view, the right side box will populate. What is that? B2B invoices. Of course, B2C will not come. B2B only will come. Credit note, debit note, amendment to B2B, amendment to credit note, debit note, ISD credit. What is ISD? Input service distributor. Already I told you. Then TDS credit, amendment to TDS, TCS credit. Then next one, import of goods from overseas on bill of entry. Import of goods from SEZ unit or developers on bill of entry. SEZ units are those units which are actually located in India, but they are treated as if they are located outside India for taxation purpose. They are given some special benefits. There are so many cities across India where SEZ units are located. That area is notified as special economic zone. And what is a bill of entry? Bill of entry is a document filed by importer to claim the goods. Now, why did this import come into picture? Let me tell you guys. In case of import of goods, we actually pay two taxes. Number one, BCD, basic customs duty. Of course, on that basic customs duty, we also pay social welfare surcharge at the rate of 10% on the basic customs duty. And apart from that, we also pay IGST, which is integrated GST. Yeah, let me take 2 minutes of your time on this discussion because it is important. I'll just take 2 minutes so that you get clarity of thought there. Listen here. Yeah. So what's happening here, my dear friends, is let's say there one person, Mr. A. He imported a machine. He imported a machine for 10 lakhs. When imported for 10 lakhs, my dear friends, on this 10 lakhs, first we'll calculate BCD, which stands for basic customs duty. Assume that is 10%. So what is bigger? 1 lakh. Apart from that, we are also required to pay social welfare surcharge at the rate of 10% on BCD. Social welfare surcharge at what rate, my dear friends? 10% on BCD, which comes to 10,000. Total figure 11 lakhs 10,000. On this, we'll also charge IGST. It is IGST because it's an intrastate supply. We know that we have got two types of supply known as intrastate supply and intrastate supply. For intrastate, we will charge CGST and GST. For intrastate, we will charge IGST. But this is an intrastate supply transaction. And assume IGST is at the rate of 18%. We will charge 18% on 11 lakhs 10,000. There is definitely a tax on tax, no doubt about it. And one point what I want to tell you here is that under GST law, hold on. Under GST law, we can claim input tax credit of this IGST what we have paid. And in fact, in GSTR 3B, when I'll show you, my dear friends, there is one separate column to show the credit which we are eligible to claim on import of goods. It's very important because what happens is that GST department will match this with customs department. What happens is that customs department has developed an interesting portal known as IceGate. I repeat, an interesting portal what they have developed is known as IceGate, which actually stands for Indian Customs Electronic Data Interchange Gateway. What is that language? Indian Customs Electronic Data Interchange Gateway, through this IceGate, the data is being pulled by GST department also and cross-checked, and they'll cross-check the amount of IGST paid in case of imports. And that also we can take it as credit. That's a very beautiful point what you have to understand here. So nowadays, GST department has developed some close relationship with customs department, and whatever we have tax, that is IGST we have paid on import of goods, that also we can claim credit, and GST department is matching that figures by cross verification with customs department. So it is very important that you show that credit separately, my dear friends. Because in GSTR 3B, I'll show you that we have got one separate table where we disclose our ITC available details, and in that ITC available, there is one separate column for ITC on import of goods. And in that column of ITC or import of goods, we clearly report this tax paid on import of goods. So it is very much essential and very much inevitable that you have to disclose the details of input tax credit properly in GSTR 3B, because subsequent matching will happen. Clear? Yeah. Let me proceed now. So going back to my slides. Yeah. So that's what is the story of import of goods from overseas on bill of entry. And one point, let me tell you here, in previous session, yesterday's class, we discussed about some point known as bill of export or shipping bill. That bill of export or shipping bill is in case of export, my dear friends. In case of export by vessel or aircraft, there is a document known as shipping bill. But in case of export by land, there is a document known as bill of export. And for import of goods, the document is known as bill of entry. And in fact, my dear friends, bill of entry is a document filed by importer in order to claim his goods. And the importance of the bill of entry in GST is that whatever GST is paid on import of goods, that can be claimed as credit. That is why that figure is populated here. Next point. Details of GSTR 2A. See left side ones. There are 7 headings in GSTR 2A format as follows. Month, year, relevant month and year for which GSTR 2A is being filed will be mentioned here. GSTN of the dealer will reflect here. Name of the taxpayer including legal name and trade name. And we clearly know the difference between legal name and trade name. Legal name means name as per PAN. Trade name is the name with which business is being done. And next point, you see, part A of ITC available contains details of what? Details of inward supplies. Inward supplies. What is that? Invoices, debit note, and amendments related to invoices and debit note. Why we are not talking about credit note? Because credit note will reduce the tax. Debit note will increase the tax. Increase tax for whom? Supplier. When the tax for supplier has increased, automatically credit for recipient will increase. So So part A will contain details of inward supplies, invoices, debit note, amendment related to invoices and debit notes, and also import of goods received from supplier in the following manner. What is that? Please see. First one, inward supplies from a registered person, including supplies attracting what charge? Reverse charge. Already I spent a lot of time with you in previous session about what are those specific goods or specific services or transactions which are covered under reverse charge, like GTA, lawyer, insurance agent, director. So many categories are there which are covered under reverse charge mechanism. That is those cases where supplier is not liable to pay GST, recipient is liable to pay GST. And moreover, recipient will pay the tax under RCM, and he cannot use electronic credit ledger. He has to use electronic cash ledger. And whatever tax is paid under RCM, that also can be claimed as again credit. Next time you see. Inward supply received from registered person, including supplies attracting reverse charge. It will have details such as type, rate, and amount of GST, eligible ITC, and the amount of ITC of the purchases from the sellers, which will be auto-populated here from GSTR1, including purchase and reverse charge. In fact, in GSTR1, if you remember, there was one separate column, supplies attracting reverse charge. So based on that, the details will come in GSTR2A. Next line, B2B invoice amendment. Then debit note, credit note. This will capture the details of credit note and debit note. By credit note, credit is not increasing, credit is coming down for recipient. This will capture the details of debit note, credit note issued by the seller during the month. Next line you see, B2B debit note, credit note amendment. It will also include any changes made to them by comparing the revised documents with original documents. Clear? Next point. Before that, some doubt in with our friend. Yeah. Sir, my question is, when e-invoice is applicable to registered person, as e-invoice can't be amended after 24 hours of generation of IRN, then how can the invoice be amended? So amendment can be done through only credit note or debit note. Yes, that's what practically happens. In case of e-invoicing customers, what happens is that credit note, debit note only. And one more amendment what can come is, e-invoice we have generated correctly, but while entering in the GST portal, we have done something wrong. That is also possible, where the auto population in GSTR1 has not come correctly. If you remember, I told you that from e-invoicing, details will directly come into GSTR1. So some mistake may happen. If it's happening, then we have to rectify that. Next. Yeah, one more question. Sir, now I am in June. Client is giving April bills also along with May bills to claim ITC in May and is reflecting in 2B also. But May month 2B total is 15,000 only. I claim 20,000 in May. I claim ITC for entries that reflected in 2B, but still the ITC box shows red in May month. What shall we do? If it is 20,000, then why 2B is showing 15,000? Okay, so April and May together you are claiming. That means April month you did not claim credit. April and May together you are claiming in May only. So technically you are claiming credit pertaining to April and May both in May only. Correct? That's what I understand. Is that your question, my dear friend? That credit of April and May both were claiming in May only? Yes, perfect. Then that's possible. Then in that case, red color will come, but still you can proceed. Because one thing you have to understand in your case is that you are not claiming credit in advance. You have actually claimed credit late. So why will department question? So if GST department, you will get one doubt. How will they know? Tomorrow when notice comes only, they'll know. Tomorrow when they give us a notice, then we'll respond. Stating that, sir, I did not claim credit more than May month. Please understand, in May month, what credit I claimed is actually pertaining to April. So I did not claim credit in advance. I actually claimed credit late. So we'll respond by our return submissions, clearly explaining and enclosing all the relevant documents. I hope your doubt is clarified. Yes, thank you. Next one, details of GSTR2A. ISD credit, already I told you, ISD, input service distributor, who can distribute credit of tax paid on input services. So see that if you are a branch, then the data under the section will be auto-populated whenever head office files GSTR6 return for the month, including ISD distributor credit and debit note. I already told you one interesting point there, that ISD can distribute credit only to their branches who are having same PAN. You cannot distribute to whomever you want. I already told you that Reliance head office can distribute credit to other branch of Reliance, but then Reliance will not distribute credit to Tata. And that too, how they'll distribute, one practical point, let me tell you, that they'll not distribute in whatever way they want. As per law, we have got specific provisions related to that as per section 20 and 21, read with rule 39, which clearly says, my dear friends, that whenever you are distributing your credit to your branches, you have to distribute, that is, apportion that credit in the ratio of turnover during preceding financial year. So branches turnover, whatever is there, in the ratio of that turnover, you please distribute your credit. You cannot distribute in whatever manner you want. Head office cannot tell, I like this branch, I'll distribute them more. This branch I don't like, I'll distribute them less. You can't do that. You have to distribute and apportion in the ratio of turnover. You can't distribute in the whichever manner you want to distribute. You can't do that. Next line. Amendments to ISD credit. This cover amendments of ISD credits done by ISD on submission of their GSTR 6, including ISD credit and debit note amendments. Right side, you see, Part B contains details of credit note and amendments thereof issued by supplier or ISD in the following manner. ISD invoice summary, and below you can see first box is related to invoice, second box is related to credit note, debit notes. Clear? This is how the columns actually look. My whole idea was very simple, that if you look at the columns, then you'll get full clarity there. That's why the screenshots have been covered there. Next. Part C. Part C contains details of TDS credit, which are auto-populated after filing of GSTR 7 by TDS director. Already we spent time on this. Then amendments to TDS credit section covers amendments to TDS credit done by TDS director in their return form GSTR 7 after its filing. Then details of TCS from supplier by e-commerce operator towards supplies undertaken through them, that is TCS credit, are auto-populated in GSTR 2A of the recipient after filing of GSTR 8 by TCS collectors. I'm sure we remember the story of TDS and TCS. Done. One question from our friend. What is the effect of amendments? See, if supplier has made any amendment in GSTR 1, that amendment will reflect for us in 2A also. And one thing is that if amendment is having an effect of what you call, you can take more credit, then in 3B, you can claim the balance credit now. But by any chance, because of amendment made by supplier, your credit is coming down. Then in 3B, you have to reduce your credit for that particular month. So if you're eligible to take credit, take credit. If you're not eligible to take credit, reduce the credit. That is the effect of amendments. I hope your question is answered. Yes, perfect. Thank you. Next point. Part D. As I told you, that is about import of goods from overseas on bill of entry, or import of goods from SCZ units or developer on bill of entry. But read that language there. It displays all the details related to import of goods from overseas on bill of entry as received from IceGate portal of Indian Customs. I already told you what is IceGate, Indian Customs Electronic Data Interchange Gateway. That's a portal developed by Customs Department through which the data is being cross-verified by the GST department. And this is how right side one box, how it looks, my dear friends. Then you can see one important pin there. Taxpayer can view original as well as amended bill of entry details. Amended column will be blank for original record. In case amended record is available, then amended column will be yes. You can see that amended, in one case it is yes, rest all case it is blank. And there's an option that you can download the documents also. Where I say CSV file, CSV is nothing but an Excel file only. Yeah, next. One question from our friend. Sir, for example, registered person has its own website and selling products online, but company getting payment through payment gateway, that is Razorpay. So in this case, Razorpay will collect TCS? Answer is no. The story of this TCS will come only when the supply of goods or services are done through some other e-commerce operator. If we are doing through our own e-commerce platform, then there's no question of TCS. Razorpay is not an e-commerce platform. Razorpay is only for purpose of payment settlement. Payment settlement only. It's not an e-commerce platform through which we are selling the goods or services. I hope you are clear and your question is answered. Yeah, one more question. Sir, if our supplier filed GSTR1 after the due date, so will it reflect in next month GSTR2B? Yes, already I told this to you, friend. That I already clearly told you that if supplier filed GST1 after the due date, then the credit will definitely reflect in 2B of next month. No doubt about it. Next point. 2B. So whatever we discussed so far is all about 2A. Now it's time to talk about 2B, which is a view-only static document. If you observe, in 2A, I use the language dynamic document, but in 2B, it is not dynamic. It is a static document. And 2B is an auto-drafted ITC statement, which will be generated for every registered person on the basis of information furnished by suppliers in their respective GSTR1, GSTR5, and ITC received through GSTR6. What is GSTR6? Written by ISD. GSTR5 written by NRTP. That's why all these points we covered in the first session only. Next point. This statement will indicate availability of ITC to registered person against each document filed by his or her suppliers and the input service distributor. In short, it is ISD. And as we discussed, ISD can distribute credit only to their branches who have got same PAN. And the point to be noted there is that credit distribution they cannot do in whatever manner they want. They should distribute in the ratio of turnover during preceding financial year. And by any chance, if turnover during preceding financial year is not available, then turnover during preceding quarter is considered. Interesting, guys. Next point. Yeah. Next, 2B. Form GSTR 2B summary is bifurcated into following two summaries. ITC available, ITC not available. Why ITC will not be available? If you remember, one point I already told you that for supplier to report any of his supplies, whatever he missed, or if any amendment he wants to do, the maximum time limit is due date of return for September month, following the end of financial year, or date of filing annual return, whichever is earlier. In the same manner, even for claiming input tax credit, for example, in one particular month, I am supposed to claim some credit, but I missed out claiming that credit. What I should do? Next month I'll claim. Like how one of our friend asked me a question, like for April month, May month, 2 months together, I'll claim in May only. So if 1 month you missed out taking credit, take credit next month. And the maximum time limit to take that credit is not to utilize that credit, to claim that credit. I'm not telling utilize. To claim that credit is due date of return for September month, following the end of financial year, or date of filing annual return, whichever is earlier. And the September story will come again. Definitely, September story will definitely come again in context of GSTR 9 also. Definitely important. I hope you are getting clarity, guys. Yeah, hold on. I think I just missed the slide. 1 second. Yeah, see that there. So what are the columns there, guys? ITC available, summary of ITC available as on the date of its generation, and it is divided into credit that can be availed, credit that is to be reversed, and ITC not available, and it is divided into ITC not available and ITC that is to be reversed. Clear? Done. One question from our friend. Sir, what is the difference between claim credit and utilize credit? Claiming credit means just that we are claiming the credit, and utilize credit means that we are using that credit for the purpose of payment of output tax. When we use that credit for payment of output tax, that is what we say that utilization of credit. Claiming credit means what? Just that we have claimed the credit and now the credit will come and sit in electronic credit ledger. When you utilize, it is called utilization of credit. Yeah, next point. Yeah, one of our friend asked question, sir, can you please explain credit that is to be reversed? I'll come to that point. We have got further discussion on that credit reversal. What is that? We'll talk in detail, my dear friend. Don't worry. Next. 2B, you can see there, summary, where ITC available, ITC not available. and ITC available, that's how it looks. ITC not available, you can see which cases ITC is not available. And auto drafted ITC statement for the month GSTR 2B. You have got two options, view or download. If you click view, you can view that. Download, you can download in Excel form, definitely. And below you can see, if you have more than 1,000 documents across all the tables of GSTR 2B, document details table will not be displayed online. That means you can't view the data. You definitely have to download the data. That's what I meant to say. You can't view the data. You have to download the data if it is more than 1,000. Just click that. You can download in PDF or download in Excel. Clear? Next. Next point, details of GSTR 2B. You can see that part A, all other ITC supplies from registered person, B2B invoice, B2B debit note, B2B amendment, B2B debit note amendment. Then ISD invoice, ISD amendment. Next point, very, very important. Inward supplies liable for reverse charge. Most important concept. Then import of goods. Finally, last one, others. Others is related to that credit note amendment, credit note reverse charge, credit note amendment. So all the credit note point is covered in others. And by virtue of credit note, our input credit will come down. It will not increase. By debit note, credit will increase, because by debit note, for supplier tax is increasing. When supplier tax is increasing, recipient credit will increase. When supplier tax is coming down, recipient credit will come down. Next point. Then, taxpayer can download GSTR 2B statement through Excel or JSN by clicking the download. So you have got two options to download JSN file or to download Excel file. If you download JSN, what you have to do, go to that offline utility, there you can import that JSN file. But better option is always generate Excel file and download, more easy. Yeah, done. Next, cutoff dates, very important. Cutoff dates for GSTR 2B. Normal taxpayer, all GSTR 1 filed between June month we are talking about, 12th June to 11th July. Then in case of quarterly frequency, 14th June, because 13th, they have time till 13th. Correct, my dear friends? And you can see that right side one box, there is one screenshot what we have given there. Form GSTR 2B shall be available only after last cutoff date, that is 13th July. So after 13th July only you can find the GSTR 2B. So GSTR 2B will be generated after the concerned cutoff date, that is 11th for normal case, 13th in case of QRMP or quarterly case. So before cutoff, if you open, they will show that details as 2B is available only after cutoff date. Cutoff date is nothing but what? What is cutoff date? Cutoff date is nothing but for GSTR 1, the due date is what? 11th of next month, and QRMP scheme 13th of next month. That is only cutoff date. So if it is filed within the due date, it will come in 2B. If it is not filed within the due date, it will not come in 2B of this month. But before the cutoff date, if you want to open and see 2B, you can't see that. It will show like this. 2B shall be available only after last cutoff date. Yeah. 1-2 questions from friends. Is there any time limit to utilize credit which is available in 3B and reflecting in credit ledger? No, my dear friend. If there is a credit which is reflecting electronic credit ledger, there is no time limit given in the law for the purpose of utilization of credit. Time limit given in the law is only for purpose of availment of credit, not for utilizing the credit. Next. Sir, is there any time limit to issue credit note, debit note for amendment of invoice? Yes. Maximum time limit is only September. After September return, you can't do anything. That is due date of return for September month following the end of financial year, or date of filing relevant annual return, whichever is earlier. After that time period, you really can't do anything there. Next point. Another question. Sir, is there any penalty for late filing of GSTR 1? Penalty is not there, but late fees is there, which we already discussed in the first session, where we spoke about the late fees. 25 per day and 10 for nil. But practically, as on today's date, for GSTR 1, the system is not auto-populating the late fees. That point also let me tell you. Next. Done. Let me proceed. This table will be very useful for you. That is for the purpose of comparison between GSTR 2A and GSTR 2B. See the difference now. 2A and 2B, nature of statement. What is the story of 2A? 2A is dynamic as it changes from day to day as and when supplier reports the documents. 2B, static as 2B for 1 month cannot be changed based on actions of the supplier taken later on. 2B is something which can't be changed. But 2A is something which keeps changing based on whenever supplier files GSTR 1, my dear friends. Then when will ITC entries get source, transfer from sources? GSTR 1, when it is saved, filed or submitted. GSTR 6, submitted. 7 and 8, filed. 2B, 1, 5, 6, only when it is filed. By this point, I am telling because there is a possibility that GSTR 1 could be submitted but not filed. I've seen this practical cases so many times where some suppliers, what they do is they will submit the GSTR 1, but they'll not file the GSTR 1. Even though they'll submit, still it will come in GSTR 2A and they'll show filing status as not filed. It will come in 2A, but it will not come in 2B because in 2B, it will reflect only when it is filed. You can see that GSTR 1, GSTR 5 or GSTR 6. That too only when it is filed. Next, cutoff date for entries to view the statement. Not applicable as it is definitely a dynamic statement. 2B, 11th or 13th of next month, depending upon return filing frequency. And statement will be generated on 14th of succeeding month. Then finally, maximum ITC entries that can be viewed on GST portal without Excel download. Without download, what we can directly view is that in 2A only maximum 500 rows and 2B maximum 1000 rows. If it is more than 500 or more than 1000, no option to view, only option is to download the Excel file and see. And my suggestion is always, even though 10-15 entries, still download Excel. Because after Excel file is ready, you can do whatever you want. You can prepare summaries, do pivots, VLOOKUP, what not. Everything and anything can be done in Excel. Correct? Next. That's about the story of GSTR 2A and GSTR 2B. Some interesting discussion, what I wanted to do related to 2A and 2B. And now it's time to start discussion about GSTR 3B, a very important summary written where we have got some good points to talk there that also we'll discuss. But without learning 2A, 2B, it doesn't make sense to learn 3B. That's why I covered that 2A, 2B first. And now we can start discussion about 3B along with discussion of some special concepts known as block credits and ITC reversal. One of our friend asked question, sir, explain ITC reversal. I'll tell you, don't worry. And special concept known as block credits. Block credit is nothing but there are some cases where credit is not allowed, even though their goods or services are still related to business use. Even though it is business use, still you can't take credit. That's why it is known as block credits. Are we ready, my dear friends? Shall we start discussion on GSTR 3B? Can I proceed? Fantastic. I love the participation of the students. That gives us more energy and more motivating. Very good. Nice. Let me start discussion about GSTR 3B. So when you participate, it will be more amazing. Yeah, one question. Just waiting because if any question comes, I'll solve, then I can proceed to 3B. Sir, can we take refund of credit available in credit ledger? Not possible, my dear friend. Only possible in case of zero rated supplies. That is number one, exports. Number two, supplies to SEZ. These cases only we can take refund from electronic credit ledger. Other cases, it is not possible to take refund from electronic credit ledger. That point is very clear. In refunds, that is specifically covered. I hope your question is answered. Yes, my dear friend, your query is resolved? Yes, done, perfect. So let me proceed and start discussion about GSTR 3B, some good and great, fantastic points to talk. So let's start the discussion, my dear friends. Another question. So exporters don't have to pay any GST. I already told this to my dear friend in previous session only. Exports is called zero rated supplies where we do not pay output tax and whatever input tax credit we have got, we can claim refund. provided that exporter applied for a LUT. LUT stands for letter of undertaking, which will apply online only. It's a very small form, which will submit the details and submit it. And in that case, we will not pay output tax, and directly we can claim refund of input tax credit. Next point. Sir, is it possible to claim refund from credit ledger in case of closure of business? Not possible, my dear friend. Even though you are closing your business, whatever balance credit is there in credit ledger, you can't take refund. Refund from credit ledger is allowed only for zero rated supplies, exports, supplies to SEZ. So that's a double benefit to exporter. Obviously, exporter, we are telling don't pay output tax, credit you take refund. We love exports, man, because foreign currency is coming to India. So government will actively encourage exports. We love that. Next. Sir, so every month we have to check 2B with books and pass necessary entries along with 2A. Yes, you should do that. No option. Yeah. Sir, in case company A, which has 2 crores ITC, is merged with company B, will ITC be transferred and allowed to company B? Yes, my dear friend, that's possible. We have got one provision in GST law, Rule 41, transfer of credit for in case of amalgamation or demerger. In that case, there is one point which says that you have to file one form known as ITC 02. There is one form known as GST ITC 02, which you have to file for transferring credit from one entity to another entity in case of merger or amalgamation. So when you file that ITC 02, credit of company A will get transferred to company B, and then company B can use that credit. I'm sure your query is solved. Yeah, perfect. Thank you. Next, let's start now GSTR 3B discussion. Let's not wait anymore. Other questions we'll solve later. Next. GSTR 3B, return form. GSTR 3B is a self-declared. That's a line which I like the most. What declared, guys? Self-declared. Summary GST return filed every month. But bracket, you have to see one point, quarterly for QRMP scheme. QRMP full form only says quarterly return monthly payment scheme. Already we spent a lot of time on that. Then a separate GSTR 3B must be filed for every GSTIN. And next one, GST liability must be paid on or before the date of filing 3B. That is earlier of its due dates. Basically, what happens is that without paying the GST, we can't file 3B, because in 3B, there is one column for offsetting your liability, which you can't do unless you pay the tax. That means without doing that offset of liability, you can't file your GSTR 3B. So offsetting liability is very important. Next point. GSTR 3B once filed cannot be revised. Of course, 3B, whatever we filed once, it cannot be revised, my dear friends. Then, even in case of zero rated liability, 3B must be compulsorily filed. If there are no transaction, then file nil return, but you have to file. Next point, right side, you see what are the columns there. First, 3.1, tax on outward and reverse charge inward supply. Very, very important, because on inward supplies covered under reverse charge, receiver is liable to pay GST. For example, if I am a company, I have taken services from one director who is not employee. Again, I'm telling who is not employee, because if he is employee, then definitely story of GST will not come, because service by employee to employer will not attract GST. Yeah. So if I am a company, I have taken services from director, then I am liable to pay GST under RCM. That also I'll show here, reverse charge inward supplies. Then 3.2, interstate supplies. Next one, eligible ITC, table 4, very important. Then table 5, exempt, nil rated and non-GST inward supplies. I'm sure we already discussed about difference between exempt, nil rated and non-GST. Non-GST are those which are not covered in GST. Nil rated are those where rate of tax is 0. Exempt are those where there is a rate of tax which is more than 0%, but presently exempt because of notification. And last one, interest and late fees. And the point we noted is that late fees is being calculated automatically, but interest, as on today's date, practically it is not calculating automatically, but in future it can definitely come. Next, before proceeding, 1-2 questions from our friends. Let me answer them. First, sir, can we issue debit note and credit note in case of TDS under GST? Yes, possible. Next. Sir, how can we make payment for RCM through cash ledger when I have enough credit in credit ledger? One point, let me tell you, my dear friend, cash ledger is only a place where you create a challan, you deposit money in cash ledger, and while making the payment of your output tax liability by utilizing credit, whatever is the RCM liability, we have to use our cash ledger balance only. I'll show you that in set off column. I'll show you how to be set off and use cash ledger only for RCM. Next. So only sitting fees is RCM, not necessary. Any payment made to director is covered in RCM. And recently, one clarification has come up with respect to payment to director, where they have clarified that if a payment is made to director on which TDS is done under section 192 of income tax, 192 talks about TDS on salaries. So if payment is made to director who is a salaried person, then in that case, RCM will not come because GST only will not come. But if payment is made to a director on which TDS under income tax is done as per section 194J, which talks about any payment to director other than salary, director's remuneration other than salary, in all those cases, RCM will come. Because practically there is the possibility where to independent directors, nominee directors, we might pay some professional fees or any other remuneration, which is not just a sitting fees. Clear? Wonderful. Next point. Yeah, one more question from our friends, sir, where we can follow all the clarification. See, any clarification, whatever comes, will come by way of notification and circular only, my dear friends. We have got the CBIC website, that is Central Board of Indirect Tax and Customs. In the CBIC portal, cbic.gov.in, we can find all these notifications and circulars. From there only we download. And that's how we enhance our knowledge. What we also do is that on every weekly, once or weekly, twice, we download all the notifications and circulars, look at all the important things, and definitely we keep in mind and utilize whenever it is required. That's the only way to follow the notifications and circulars. Next point. GSTR 3B is divided into following section 3.1, very important. Table for filling out details of tax on outward and inward supplies liable to what charge? Reverse charge. 3.1. And once I click that 3.1, if you just tap it, this page will come, my dear friends. Table 3.1 A, B, C, and E are auto drafted based on values provided in GSTR 1. So whatever figures we have shown in GSTR 1, that figures are auto populated in GSTR 3B based on values we have shown in GSTR 1 for 3.1 A, B, C, and E. But why not D? That doubt can come to you. See that 3.1D is auto drafted based on 2B. By the way, what is 3.1D? Read that. 3.1D is inward supplies liable to reverse charge. If it is inward supplies liable to reverse charge, how it will come in our GSTR 1? Some other person's GSTR 1, it will come. So for some other person, GSTR 1 means, for me it is 2B. So in my 2B, I can find details of inward supplies liable to reverse charge. So what is 3.1 A, B, C, and E? 3.1 A is outward taxable supplies other than zero rated, nil rated, exempted. 3.1 B is zero rated, 3.1 C is nil rated and exempted. And last 3.1 E, non-GST outward supplies, where tax column is dash, dash, dash. There is no tax column to be entered there. The logic is simple because non-GST covers alcohol, liquor for human consumption or that 5 petroleum products where there is no GST at all. But you have to just report it here, only for reporting purpose. That's all. But one point which I want to tell you here, very important, is that, sir, I've got one of my client who recently came to me. It's a new client which has come up to me recently, where he came to me and told, sir, I'm doing exports. I'm a clear-cut exporter. I've got one LUT, letter of undertaking. I did not pay tax on my exports, but I want to claim a refund of the tax paid on my inward supplies. I told, yes, sir, we'll get the refund for you. But when I opened his GST returns of all the previous months, I was surprised to see that his exports, he did not report in GSTR 3B, 3.1B column, but instead he reported in 3.1A column. It is very, very important that zero rated supplies, that is export or supplies to SEZ, where you are eligible to claim refund of tax paid on inward supplies. In that case, it is at most important that the zero rated supplies are to be reported in 3.1b only, not 3.1a. By mistake, if report in 3.1a, then gone. Your refund will get stuck. And officer will start telling there is no question of issuing refund because we want that figure to be there in 3.1b. Where is it in 3.1b? I hope we are clear with this point. Very practical, but very much big issue because we have to be very careful on this point. I've seen so many issues practically like this where a lot of people, instead of reporting their exports in 3.1b, they are directly showing in 3.1a. Getting clarity? Next, one question from our friend. Sir, where to show supplies liable to reverse charge? My dear friend, let me tell you, if we are doing some supplies which is covered in reverse charge, from supplier's point of view, there is nowhere a column in 3b to show that. So practically a lot of people are showing that in exempted column. That's what people are trying to follow. But as such, there is no separate column to show supplies attracting reverse charge. Inward supplies attracting reverse charge is there, but outward supplies attracting reverse charge is not there in 3b. Anyways, we are showing that in GSTR1, right? In GSTR1, we anyways have got separate column outward taxable supplies liable to reverse charge. That's why in 3b, there is no column for that. So maybe they thought it's not required, so they just left it. Then next, sir, it is this. In your case, how refund will get? We followed some other process of refund where refund of excess payment of tax, some other column is there in the refunds. Using that, we have got the refund. Next. Sir, can you explain again about 3.1d? My dear friend, 3.1d is about inward supplies liable to reverse charge. That means, for example, as I told you already, so let's say if Shivateja has got a company, Shivateja Limited, I have taken some services from GTA who has opted for 5%. Why I'm telling 5%? Because if GTA opts for 12%, there is no question of RCM. RCM story will come only when GTA opts for 5%. So what has happened is that GTA opted for 5%. Now who is liable to pay GST on that? Shivateja Limited is liable to pay GST on that under reverse charge mechanism. Now Shivateja Limited will show that value of inward supplies liable to reverse charge under 3.1d. I hope we are clear. Your question is answered. Next question. Sir, what are the consequences of late registration of LUT after exports are made? My dear friend, as per law, LUT should be applied before making exports, not after making exports. Practically, I have not seen that case for a reason because in every of our client case, we always apply LUT, then only do exports. And every person engaged in exports always apply LUT before exports only. And if you do LUT later, after exports, there is a possibility that refund may be rejected. Next. Sir, can you repeat what is ITC claimed? ITC claimed means we are showing that in 3B and claiming that credit. And once we claim that credit will come and reflect in electronic credit ledger. That is what is the meaning of claiming of input tax credit. Next. Sir, a local manufacturer claim refund credit for ITC in credit ledger for inverted duty structure. Yes, for inverted duty structure, refund can be claimed. But let me tell you, inverted duty structure is one such case where rate of tax on inputs should be higher than rate of tax on output. For example, let's say I'm manufacturer of chocolates. What is that I'm manufacturing? Chocolates. Now, whatever raw material I'm using for manufacture of chocolates, assume that GST rate on all that raw materials is 18%. But the finished good what I manufacture is chocolate, for which GST rate is 5%. Then that is called inverted duty structure. Inverted duty structure means the rate of tax on inputs is higher than rate of tax on outputs. In that case, refund can be claimed. I hope you are clear with inverted duty structure. Done. Thank you. Next question. Sir, is it mandatory to get IEC registration for export of zero rated supply? IEC registration concept is not as a part of GST law. IEC concept is only in case of customs provisions. Custom provision says for exporters and importers, IEC is mandatory, but that is never given in GST law. Next. So what is the difference between return filed and return submitted? Submitted means I'll show you now. When I complete this GSTR 3, then I'll show you there's an option of submit return, file return. We'll submit first, then we'll file it. First we'll submit means the data is uploaded. Once data is uploaded, you can't do anything. Then we'll file using that OTP. If you remember, I told you that for companies LLPs, digital signature is mandatory. And for other than companies LLP, we can file through OTP. That is electronic verification code, which will be sent to the mobile number given at the time of GST registration. Next point. Another question. So what is the consequence of purchase from unregistered dealer? No consequence. As per law, there is a provision which says that if supplier is unregistered, recipient is registered, then it is covered under RCM. Practically, that concept is applicable only and only for real estate sector who are constructing a residential apartment and who are constructing a residential apartment where law clearly told them that at least 80% of your purchases you should make from registered persons only. And if you don't do that, we'll ask you to pay tax under RCM. Like that, some detailed provision is there. Next, another question. Sir, how can we keep in touch with you for queries? You can mail me, my dear friends. I already gave you my email address. You can mail me or you can WhatsApp me. I'll be happy to reply. Don't worry. Next. Yeah, I'll proceed now. 3.2, interstate supplies. Supplies made to unregistered persons. That is what? B2C. Composition taxable person. UIN holders. What is UIN holders? Already I told you, my dear friends, UIN holders are nothing but any consulate or embassy or any agency of United Nations like UNICEF, UNESCO, and WHO. These are covered in UIN holders. So once we tap that and click that, what is that you're able to find there? Details of interstate supplies, but you have to see that 3.2 of the supplies shown in 3.1a. That means 3.1a will show full figure. What is 3.1a? Outward supplies. They will show full figure. And out of that, what is the details of outward supplies made to interstate supplies made to unregistered person, composition taxable person, and UIN holders? That also will show separately. Yeah, next. Some query. Sir, in case of red alert message in 3B, if department wants to pick a scrutiny, what is the time limit in which they can issue notice? See, as of now, there is no time limit given for scrutiny notice in the law, but in case of determination of any tax not paid, short paid, or ITC is wrongly availed or utilized, as per law, there is one section known as 73, where the time limit to issue notice is within 2 years, 9 months from due date of filing annual return. But if it is a case of fraud or misstatement or suppression of facts, due date, that is the story of what? Misstatement, fraud, or suppression of facts, then very clearly, what is the point, my dear friends? That is 4 years, 6 months. In general, it is 2 years, 9 months. But in case of fraud, misstatement, suppression, it is 4 years, 6 months from due date of filing annual return. Next. Sir, from GSTIN, we can't identify who are under composition scheme. Not possible. By looking at the number, we can't identify who's under composition. We have to log in into the GST portal, search user services, search the taxpayer, and then find out whether it is in composition or not. That's a painful task. Next. Sir, can you show us how the cutoff date works practically? We'll do that. Don't worry. Next. For the purpose of filing 3.2, should we ask our customers whether they're on regular scheme or composition? Strictly speaking, yes. But that's a big painful task, which a lot of people are not finding out and showing under 3.1a only. But as such, the answer is definitely yes, my dear friend. Next point. Details pertaining to eligible ITC, input tax credit. See that eligible ITC? Yeah. We'll discuss this in detail. And before I proceed, let me show you something interesting with relation to what our friend has asked in relation to the cutoff date. That also let me show you, and then I can proceed. Hold on. Just 1 minute, please. Yeah. So guys, you can see my practical example here, sir. If you see here, this is one of my client GSTR 2A, where you can see that this is downloaded from the GST portal, where if you see there are so many invoices which are there in the GSTR 2A. And you can see that this is B2B, B2B amendment, credit note, and I also told you about ISD, input service distributor, TDS, TCS, and also related to import of goods. So here in 2A, there are so many things, but here if you see, there are some things highlighted, that is, there's an entity known as Sai Krishna Electricals here. Now, let me open 2B also and show you now once. Hold on for a second. Yeah. So this is how GSTR 2B looks, my dear friends. And here, when I go to ITC available, I can see the total credit what I have got with respect to the B2B invoices. And at the same time, I can also see what is the story of that B2B. In that B2B, I can find all the details. If you observe carefully here, I can find the details in terms of trade name, legal name. Here you can see all the entities are there, but I'm not able to find their Sai Krishna Electricals, what we discussed in the story of GSTR 2A. And you would have seen that in GSTR 2A, there is an entity there, Sai Krishna Electricals, which is reflecting in GSTR 2A, but that is not reflecting in GSTR 2B. The logic is very simple, that that person did not file return within the due date. So if GSTR 1 is not filed within the due date, the credit will reflect in 2A, but not in 2B. So here, for your clarity, my dear friends, in GSTR 2B, there's a column for filing date. This is for the month of March month period. You can see that 9th April they are filed. 9th April is within the due date. And 13th April, somebody using QRMP scheme I'm talking about. And February month, somebody filed on 13th March, 18th March. So since for February month, they filed after due date, it is now reflecting in March month. So the logic is simple, that by any chance, if the return is filed within the due date, that is a cutoff date, then the credit will reflect in 2B. If the GSTR 1 is filed after the cutoff date, then credit will reflect in 2A, but not in 2B, but it will still reflect in the 2B of next month. That is important point which you have to keep in mind. So this is how I really wanted to show there in terms of the difference between 2A and 2B. So there's a high possibility practically that in 2A, the amount of credit is more as compared to 2B. Yeah. So that's how it practically works. So now let's go back to our presentation and discuss the balance points in our 3B. See now, details pertaining to eligible input tax credit. So once I tap that, what are the columns there? Please see. First, import of goods. I already told you that in relation to import of goods, whatever credit is there, that has to be shown very clearly there. No doubt about it. Next, import of services. Then inward supplies liable to reverse charge. I told you that whatever tax we pay under RCM, that we'll pay using electronic cash ledger. And again, whatever tax we paid under RCM, that we can claim it as input tax credit. No doubt about it. Tax paid under RCM can be claimed as credit. Next, inward supplies from ISD. Last column, all other ITC. In general, all other ITC column, we will show our routine credit. Whatever we purchase locally within India or from within the state, outside the state, we will show under all other ITC. Then ITC reversal. When ITC reversal will come, I'll explain to you in detail now. Then net ITC available. Total ITC minus ITC reversal. Balance is net, which is available. The next one, ineligible ITC, that is section 17, subsection 5, very important, which talks about blocked credit. As I told you, there are certain special cases where credit is blocked. Even though it is related to business use, still credit is not allowed. Now see one interesting flash which has come there. See the flash, guys. Rule 42, manner of determination of input tax credit in respect of inputs and input service and reversal. And 43 is related to capital goods. What is that story? let me explain that to you in a simple manner so that you will get clarity on this concept of reversal. Listen carefully here. Yeah, let me give a small example here, friends. See carefully here. So let's say there is one entity known as PQR Limited, which is a manufacturer, and they are manufacturing two products, pens and pencils. An interesting point is that pens is a taxable product, pencil is an exempted product. Now, one point is very clear that if output is exempted, then we cannot take input tax credit. If output is taxable, then only we take this input tax credit. That's a common principle always, that if output is taxable, then only we can take input tax credit. But if output is exempted, then there is no question of claiming input tax credit. Now, let's say there is Shivateja, who is a chartered accountant, who is a registered person. Now, what I have done is I have conducted audit of PQR Limited. Now, will I do audit only of pens? No. Will I do audit only of pencils? No. I have done audit for entire company as a whole. Now, from PQR Limited point of view, it is an input service what they have taken from Shivateja, and that is related to company as a whole. That means it is related to both inputs as well as capital goods. When it is related to both inputs as well as capital goods, both related to, to say it is related to both taxable as well as exempted goods. Now, what they told is that, for example, let's say for conducting this audit, I gave a bill of 10 lakhs plus GST at 18%, which comes to 1.8 lakhs. This entire 1.8 lakhs, PQR Limited will claim as input tax credit. Input tax credit. Further, what they should do is that they should see what is the ITC they have got, what is the ITC they have got into turnover of pencils divided by total turnover. What is the language we have done, my dear friends? ITC into turnover of pencils divided by total turnover. Turnover of pencils divided by total turnover. Total turnover means pens and pencils. So basically, proportionality will calculate some figure. For example, pencil turnover is, let's say, for simplicity, pencils turnover is, let's say, 60 lakhs. Pens turnover is, let's say, 1.2 crores. Now, how will you calculate this? 1.8 lakhs into 60 lakhs divided by 1.8 crores. Then it comes to how much, my dear friends? 60,000. That means technically the 60,000 is the credit which is attributable to pencils. This 60,000 should be reversed. This should be what, my dear friends? Reversed. So the whole fundamental logic, what we are trying to apply here is that first, we will claim full credit. That means the total credit of 1.8 lakhs will directly claim. Then after that, whatever credit is attributable to exempt supplies, that we will do reversal. The reason being very clear that this 1.8 lakhs is technically known as common credit. This concept of apportionment and reversal we will do only and only in case of common credit. Imagine if 1.8 lakhs credit is relatable only to pens, then happily I would have taken full credit. If 1.8 lakhs is related only to pencils, then I would have not claimed credit at all. But since this 1.8 lakhs is a common credit which is related to both pens as well as pencils, what we'll do is that first we'll claim full credit. I repeat, first we'll claim full credit, then whatever is attributable to pencils which is exempted, that we will reverse it. And this concept is given by GST rules, which clearly says that it has to be reversed like this. Now one question, student is asking one question. Sir, will table 4 auto-populate or it can be changed manually? Table 4, I already told you credit, auto-populate figure will come from GSTR 2B, but you can change manually. But if you claim more than 105%, that red flag will come, red flash will come. How I'll show you, don't worry. But are we clear with the story of this reversal, my dear friends? Very, very important point. This is one way where reversal can happen because of this rule 42-43, where credit is attributable to both exempted as well as taxable, which is technically known as common credit. If that credit would have been related only to taxable, I would have taken full credit. If the credit is related only to exempted, I would have not claimed credit at all. But here, the credit is related to both taxable and exempted. That is why it is known as common credit, which will be apportioned. So first we will take full credit, then show under reversal. That is what is the system, what we have to follow. Then, one more interesting point I will discuss with you. One of our friend is asking, what if pencil is zero rated but not exempted? Friend, my dear friend, zero rated covers only two things: exports, supplies to SEZ. If it is zero rated, then we can still take full credit. No need to do this reversal. The story of reversal will come only for exempted, but not for zero rated. Are you clear? This reversal concept is only for exempted, but not for zero rated, my dear friend. I hope that point makes sense. Yes. Now listen. One more interesting situation. Sir, let's say there is a chartered accountant who has supplied service to a client. And what has happened is that supplied service on 10th April and chartered accountant has given invoice on 25th April. 25th April. But the problem is, client has made payment to chartered accountant on 10th December. Somewhere in April, chartered accountant has given invoice to customer and payment is made on 10th December. This is a very practical issue. Now, the interesting point to be noted is that from chartered accountant's point of view, my dear friends, time of supply will directly be 10th of April. Wait a second. Time of supply will be 25th of April because time of supply is date of invoice, date of payment, whichever is earlier. So 25th of April will only become time of supply. So chartered accountant should pay GST to government for April month itself. April month itself means when he is filing 3B of April month, in the month of May, he has to pay the GST to the government. He has to pay GST to the government. So now the interesting point to be noted here is that chartered accountant has paid GST to the government and client also claimed input tax credit in April itself. Now here, one point you have to understand here is that chartered accountant ego is completely hurted. The reason being very clear that chartered accountant has paid the GST to the government from his own pocket because client did not pay the money so far. Client is paying money in December, somewhere after 9 months, somewhere after 6 months, they are actually paying, making the payment. April to December, right? Almost 9 months actually. After 9 months, the client is making the payment. But chartered accountant should pay GST to the government in April itself. Now the client also will happily take credit. Now client is taking credit in April even without making payment to supplier. So in simple terms, we say recipient can claim credit even without making payment to supplier. But one point what they put in the law is that if recipient, I repeat, if recipient fails to make payment to supplier within 180 days from the date of invoice. How many days, my dear friends? 180 days from date of invoice. Then whatever credit is enjoyed by the recipient should be reversed, my dear friends. Very, very important point. Like this also, one practical case can come with respect to ITC reversal. Practically what we do is that when we conduct GST audit, we check the creditors which are outstanding for more than 180 days. Creditors for more than 180 days means what? We did not make payment to them since last 180 days. That means the credit should be reversed. This point is given by Rule 37. Very clearly, Rule 37 says if recipient fails to make payment to supplier within 180 days from the date of invoice, then the credit away should be reversed. No doubt about it. Clear? And moreover, one point you have to understand here is that as per law, this is the rule, but a lot of recipients practically are not doing this. But in GST audit, we are giving a comment always. In an audit observation, we are writing there that recipient did not reverse the credit, even though payments are outstanding for more than 180 days. Because I have to protect myself, right? Exactly. Yeah, some questions from our friends. First one question. Yeah. Sir, if we claim 105% credit, then we have to reverse that 5% credit later? Not necessary. Law only told you can take credit of 105%. Definitely. But that should be eligible credit. That's important. Next. Recipients are voluntary, not reversing. Yeah, that's a practical issue. Law only told recipients should reverse. But a lot of people are not doing that. But in GST audit, we are giving a comment on this as audit observation. We are doing that. Next. Is there any case law for this rule? Why do you want a case law? Let me tell you, this point is actually given by section 16.2. Second proviso to 16.2, read with rule 37, talks about this concept. Of course, practically a lot of people are fighting saying that I am eligible to take credit, why I should not take. But there is no specific case law as such. Next. After 180 days, payments done, can recipient take credit? Yes. The point is very clear that once 180 days is over, whatever credit is claimed, that is reversed. And again, after payment is made to supplier, you can again take credit. So it is something like you have taken credit, 180 days is over, reverse that credit. You made payment to supplier, again take that credit. Credit taken, credit reversed, again taken. That's the point. Next question. Sir, in common credit related to taxable and zero rated, in that case, full credit can be claimed. Yes, we can definitely claim a full credit. And for refund purpose, you always follow the concept of provisions related to refund. There is one specific formula which says that we will claim refund only related to turnover of zero rated supplies. There is a formula for claiming refund. Next. Sir, can we receive any message that we have paid tax by cash of such an amount, or tax paid is adjusted by way of utilizing ITC? We will get a message, no doubt about it. And message means one email will come that you have successfully filed your return. And you can go to your electronic credit ledger or cash ledger, download the statement and see how it is utilized. Are we clear? Everyone? Can I proceed to the next point? Fantastic. Let me proceed. Yeah, coming back to discussion, all the discussion I've done for a reason because a lot of friends wanted to understand the story of reversal. That is why I've spent time on this. Next point. Prerequisite for availing ITC. What are the conditions to claim input tax credit? First one, he should be in possession of tax invoice or any other specified tax paying document. Next, he has received the goods or services and there is a possibility of bill to ship to also. That is, for example, if I'm buying goods from one person, for example, I'm in Telangana, I purchase goods from Gujarat. There is a possibility that I might tell the Gujarat person telling that don't send the goods to Telangana, send it to somebody. That's called bill to ship to model. Even though I told him to send the goods to other person, still I can take credit. Still I can take the credit. Then tax is actually paid by supplier, then recipient has furnished return. These four are the conditions which has to be satisfied for the purpose of claiming the credit. One, he should be having a tax invoice. He must be receiving the goods or services. Tax is actually paid by supplier. Recipient has furnished the return. Done. Before special points, one query from our friend. Sir, I had seen my relatives' books and they claimed only 100% credit but not 105%. When I asked them, they told that work will increase for us. Yeah, wonderful. If you claim 100%, you are more clean because you are claiming only as per 2B. You are not claiming more than that. So your books will be more easy. No doubt about it. Next. Sir, if a company is selling export as well as domestic sale, so for zero rated supply, ITC unutilized, can I use credit against my domestic supply liability instead of taking refund? Yes, my dear friend Ravi, you can definitely do that. Whatever credit is there, you can use it for payment of tax on domestic sales. You can do that. Clear? Next. In practical, whether any companies are raising self invoices. I mean, if are you asking about RCM by any chance, Mr. Jeevan? If the question is about RCM, then answer is yes. I myself have seen so many clients where RCM self-invoicing is being done. And we don't submit that self-invoicing to anybody, or neither GST department is asking us, but we are preparing that self-invoice as a documentary evidence to keep with us, because that's very important documentary evidence. Let's proceed. Is there any problem if you have not maintained? As such, as per law, you are required to maintain. If you don't maintain, tomorrow when the GST department is asking, how do you submit? Now you don't tell me at that time we'll prepare and give. That's your choice. But as per law, you have to maintain. Next. Special points. If the inputs are received in lots, that means 1,000 items, we are coming in parts, 200, 300, 400, 500, they are coming in lots, one after other. Recipient will be eligible to avail credit only when the last lot of input is received. This is important point. And next point, very important, I already told you. He should pay the supplier the value of the goods or services along with the tax within 180 days from the date of issue of invoice, failing which amount of credit availed by recipient would be added to his output tax liability along with interest. That point I'll repeat again. Recipient should definitely make payment to supplier within 180 days from the date of invoice. If recipient fails to make payment to supplier within 180 days from the date of invoice, whatever credit he has enjoyed will be added to the output tax liability along with interest at the rate of 18% per annum. Next point. Interesting, my dear friends, where you cannot claim input tax credit, where credit is completely blocked. First one. Motor vehicles and other conveyances, including renting of such vehicle. And in motor vehicle, one big point I'll tell you is that motor vehicle where seating capacity is up to 13%, including driver, you can't take credit. But if the seating capacity is more than 13%, you can still take credit. For example, if Shivateja purchased one BMW car for my business use, I told my family members, nobody should enter this car. This car is only and only for the purpose of my business. Still, I cannot take credit because it's a block credit. But imagine I'm a software company. I purchased one bus where seating capacity is more than 13 passengers. Then definitely I can take credit. Yeah. And one more possibility. If I buy one vehicle for transport of goods, then credit is allowed. And if I'm somebody who's a dealer in motor vehicle, buying vehicle, selling vehicle, then also I can take credit. Getting clarity, guys? Good. Next point. Food, beverages, club membership, we can't take credit at all. One point you have to understand, in case of food items, credit is not allowed. Practically, one point you have to note here is that a lot of times this exercise we do, our clients, what happens is they go to a hotel, stay in a hotel, also have food in the hotel. And they give us a bill telling, sir, please take credit. We always check what is the credit related to room rent. What is the credit related to food items? Whatever is the credit related to room rent, that we take credit. Whatever is the credit related to food items, that we can't take credit. Because for food and beverages, we can't take credit at all. It's a block credit. Next. Next one. Services of general insurance, servicing, repair, maintenance related to vehicle where credit is blocked. That also we can't take credit. Next one. Membership in club, health and fitness center. Shivateja is telling I'll join gym, fitness, COVID, very important. Whatever GST I pay, I cannot take credit. Then life insurance, health insurance, whatever GST is paid on that also we can't take credit. Then travel benefits given to employees, even for that, credit is not allowed. Interesting point. Next. See the simple point for motor vehicles, where the capacity is up to 13% with the driver, credit is not allowed. But if it is more than 13%, credit is definitely allowed. But below you can see one point, credit is still allowed in case of further supply, or if you are in the business of transporting passengers, like you are Ola, Uber, or you are Orange Travels or any travels company, you can still take credit. Then training, it is something like a driving school, then also credit is allowed. And if you're using for transportation of goods, then also credit is allowed, my dear friends. Done. Next point. Some more block credits, please see that also. We cannot take credit even in case of any works contract service. Now, first of all, what is works contract service? Works contract is a contract where there is element of goods and services. For example, if I call one painter and I hand over a paint box to him and ask him to do painting, that is clearly a service. If I go to a paint shop and buy paint boxes, it is clearly a goods. But if I call a painter and tell him, boss, I want you to buy paint box, I want you to do painting, both, then it's called works contract. So works contract for construction of properties, we can't take credit. Next one, composition scheme, that is anyways not eligible. Next one, no ITC for non-resident taxable person, that is NRTP. NRTP cannot take credit except on goods imported by him. Except for that goods imported by him, he can't take credit on anything. Next, no ITC for personal use. Simple point. Next one, goods lost, stolen, destroyed, disposed of, or written off by way of gift or free samples. This also we can't take credit. In fact, practically in my own office, what I do is that, let me tell you very clearly, in my own office, my dear friends, Diwali time, we give some gifts to our office staff. When I buy that gifts, on that, I would have purchased online or any shop, I would have paid some GST on that purchase cost. That GST, I never took credit till now since last 3 to 4 years. The reason being very clear that any goods what I buy, to give it as a gift, as per law, credit is not allowed. And if you ask me, sir, you take, who will get to know? Who will know? Tomorrow, if audit happens or if any scrutiny happens, they'll get to know. And they'll ask me to pay along with interest. If you ask me, how will they know? Anytime they can know. Till the time they don't know, you can enjoy. But after they know, they're gone. Completely gone. Next one. No ITC for tax paid on account of what? Fraud, misstatement, or suppression of facts. So if it is on account of fraud or misstatement or suppression, then also you can't take credit. So before I proceed, let me complete some queries from our friends. Yeah, sir, inward supply from unregistered person, we do self-invoicing and we claim ITC, but the same is not shown 2A. What will be the effect? No effect for that because supplier is unregistered. If supplier is unregistered, how will that reflect in 2A? It's not possible. Next. If invoice date is 1st Jan, but I received invoice on 20th February, which date should be taken for Rule 37? We'll always consider the date of invoice, not when you received invoice. 1st Jan only we'll consider. Next. So if a company has a cafeteria and for food another contractor is hired and contractor arrange all food items and in turn contractor issues monthly invoice in which GST is charged, can company avoid ITC? As I already told you, on food and beverages, we can't claim credit. But if the company is supplying that food or providing that food as a statutory obligation, then credit is allowed. For example, I'll tell you one practical case. In case of factories, as per Factories Act, it is mandatory that they should put one cafeteria and provide food to their factory employees. In that case, credit is allowed. If it is just like that company doing, credit is not allowed. If it is as per statutory obligation, then credit is allowed. Next, one more question. Sir, interior works done for office, we can't take credit. As I told you, we can't take credit related to construction of immovable property. Then, sir, if car is purchased by CA, can you claim ITC on cost of the car? No. That's what I told you. Where seating capacity is up to 13%, credit is not allowed. Where the capacity is more than 13%, then only credit is allowed. And if it is car, then definitely less than 13 only. Credit is not allowed. Then what we do is that GST component also we will capitalize and increase the cost of the car in our balance sheet and claim depreciation on the full cost. Because anyways, when we are not claiming credit, at least we'll take depreciation, sir. Credit is anyways not coming. Better at least take depreciation. Then for cupboards and shelf done for office purpose. My dear friend, that's what I told you. In case of construction of immovable property, when you talk about shelf or any cupboards, if it is a movable like tables, chairs and all, then credit is allowed. If it is immovable, then only credit is not allowed. For walls, then credit is not allowed. If it is for tables and chairs, which is movable, then definitely credit is allowed. You have to see whether it is movable or immovable. For example, if in my office, when I purchased AC, tables, chairs, whatever GST I paid, I have claimed credit because it is a movable. It is not immovable property. Next. GST registered person, proprietor, not filed returns for Jan and Feb. He died in March. Can any of his family members file GST returns for the respective months using deceased person's contact number for OTP? Is this correct? If not, tell solution. That is the only solution what you have. What are the solution we can have? If he has died, what you should do? Cancel the GST registration, go to the concerned officer, and then submit the required documents if necessary. Online apply for cancellation, then get it closed. Or else, online, you change the OTP, that mobile number you change, and continue that registration. But when he died, where is the point of doing business on that person's name? Close it. Next. So if company purchases mobile on its name and give it to his employees for official use, can ITC be availed? And or is it covered under personal use? If it is for official use, then definitely credit is allowed. But if it is personal use, then credit is not allowed. You have to check for what purpose that cell phone is being used. If it is official, then definitely credit is allowed. And in my office, last 2 months back only, I purchased one phone. On that, I paid GST, and I have claimed credit on that. Next question. Okay, sir. Car purchased for providing Ola Uber service. Is credit allowed? Yes, definitely credit is allowed. If somebody is in business of transporting passenger, then definitely credit is allowed. That's it. Any other query? Yes. Catering service received in company bill given with the GST. You still can't take credit. But if it is on account of statutory obligation, as I told you, then only credit is allowed. As per law, it is mandated that you should provide that food facility, then credit is allowed. If it is just like that done, then definitely credit is blocked, my dear friends. No doubt about it. Important point, but of course, that is what is the point. Next. Let me proceed now. This is a story of interesting points about block credits. Yeah, 1-2 more questions. So yesterday you explained about fixed and self-assessment. Is that tax liability 35%, 100% is outward supply tax or set off after ITC? Tax liability means obviously after set off only. That's because you are paying using cash ledger. If already you have got credit, then there is no question of paying again. Another question. What is the rule for claiming ITC on capital goods? It is available in first year itself. Fantastic question, my dear friend. Once upon a time, prior to GST law, under VAT regime, they told for capital goods, take credit in 36 monthly installment. And in excise duty service tax, they told take 50% in first year, balance 50% in next year. But under GST law, there is nothing called first year, next year. Entire credit on capital goods you can take in first year itself. And moreover, first month itself. Yeah. One more question. Sir, what is the logic behind blocking credits on above items? Government feels that they are more or less related to personal. We don't want to give credit. For example, if Shivateja is buying car, even though he might tell official use, how can government come and check whether he is driving the car for personal use or business use? So they thought better we will block the credit only. Safe side. And this point was there prior in service tax also. Yeah. Next. Let's proceed, my dear friends, now. Exempt, nil rated and non-GST. This point already we discussed. What is the difference between exempt, nil rated and non-GST? Yeah. 1-2 more questions from our friends. Sir, but that can be for your mobile as well. Yes, but mobile, the amount of GST what I paid is different. But for motor car, the amount of GST what I paid is different. That's why motor car, they don't want to give credit at all. And this is blocked right from inception of indirect tax only. In service tax also this was blocked. Same thing has been brought to GST also. Next one. So the same is also can be AC mobile also. That's what I told you. AC mobile are those where the price pool is much lesser compared to motor vehicle. For motor vehicle especially, they don't want to give credit where capacity is less than 13. In fact, originally there was no concept of less than 13 also. Last year in February, they brought amendment telling that if capacity is less than 13, no credit, more than 13, definitely credit is allowed. That's the whole logic what they applied. and motor car being that more or less motor car GST component is more, the same thing they forward from service tax also. Next point. Interest, late fees, already I told you, interest is auto-populated, and you can see that box what I wrote there, 25 rupees, any liability, and if it is nil liability, it is 10 rupees per day. And I already told you that interest is practically now not auto-calculated as on today's date. Next point. This is the story, how it looks, my dear friends. You can see here, other than reverse charge tax payable, and here, important point, you can see table number 7. I want you to look at that very clearly. Other than reverse charge, tax to be paid in cash. That is, basically from output tax, we will reduce our input tax credit, then balance is to be paid in cash. But reverse charge tax, you should always pay using cash ledger only. You can't take using credit ledger. Next point. 1, 2 queries. Sir, if company purchases bikes and gives to its factory employees, still ITC is not eligible? Answer is no. Bike is definitely less than 13%. Credit is not allowed. Next point. Sir, when we make amendment to anything, what is the effect? Simple. From receiver point of view, if credit is increasing, claim credit. Reducing, reduce the credit. For supplier, if tax is increasing, pay the tax. Tax is reducing, reduce the tax in 3B. But reducing tax, increasing tax effect will show in 3B. In 1, we'll only do the amendment activity. Next, moving forward. Yeah. Last few more points. See that. One question before that. So whether is it mandatory to fill non-GST inward supplies? Not mandatory to fill non-GST inward supplies like petrol or your alcohol, liquor and all. It's not mandatory to fill. It's purely optional. Set off of tax. I'm sure most of you know this point, that CGST credit, we can use it for CGST first, then for IGST. SGST credit first for SGST, then only for IGST. But IGST credit, how will you use? First for IGST, then we can use it for CGST or SGST in any order or any manner. Why I'm saying any order? Because CGST is IGST credit. First, you use it for IGST. Then you can use it for CGST or SGST. Or you can use half of 50-50, 60-40, 70-30, whatever ratio you want to use, you can use. But see one circle what I gave there. It is mandatory to utilize entire IGST available in credit ledger before utilizing ITC on CGST or SGST. Without utilizing CGST, without utilizing IGST, you can't use CGST, SGST credit. First, you have to completely utilize IGST credit. Then only you can utilize CGST, SGST credit. And one point I gave there, no cross utilization of CGST and SGST. That means you can't use CGST credit for SGST, SGST credit for CGST. Yeah, one doubt. Sir, can we use ITC of reverse charge to set off output tax on forward charge? Yes, you can do that. But first reverse charge, you pay tax, then claim credit and use it for any output tax possible. Next. One small example, you can see here, like how the figures are there. Output tax figures 2,500, 1,500, 1,500. Input tax credit 3,500, 1,000 and 1,000. And this is how we will set off, my dear friends. That IGST credit, we have got 3,500, 2,500 first we used it for IGST. The balance 1,000 what you have got, you can use it for CGST or you can use it for SGST or half of also you can divide. And my recommendation is always divide half of so that you can utilize in optimum manner. For example, here 1,000 utilized here, right? So payable CGST is 0, but SGST payable 500 has come. Imagine if you would have utilized 500 IGST, then your tax payable would have become 0 only. So utilize in the most optimum possible manner within the parameters of the input tax credit utilization principles. That's what you have to keep in mind. Keep the principles in mind, and using that principles, you can definitely, what you should do, utilize the credit and set off the credit. Yeah, one query. Sir, while using tally, reverse charge payable shown payable and available for ITC in same month, is it right to proceed? I already told you, any tax paid under RCM, you can take credit in same month or you can take in subsequent month. Some people are following the concept of subsequent month, but some are still taking credit in same month itself. So that is your choice. Next point. Important rules to be considered while filing 3B. See now, already we discussed that first. 36.4 already I told you it was 20% once upon a time, then became 10%, and now it became only 5%. That's it. 5% of credit reflecting in 2B. Yeah, one question before that. Sir, can we claim ITC on capital goods? And what is the treatment of ITC claimed earlier if such capital good is destroyed subsequently, whether in same year of purchase or subsequently? First, you would have already claimed credit on capital goods. Subsequently, when it is destroyed, you reverse the credit. And one point you have to understand is, imagine after 1 year it is destroyed. We have got one concept known as 5% per quarter. So what we do is, if after 1 year it is destroyed, what we do is total credit what you enjoy minus 5% per quarter for 4 quarters, because 1 year, then the balance figure what we get, that only we will reverse. Because 1 year we used it, right? Then I should reverse everything. That is the logic there. Next point. This point already I told you, one new budget amendment 2021 amendment, where they told that input tax credit on invoice or debit note may be availed only when the details of such invoice or debit note have been furnished by supplier in the statement of outward supplies, and such details have been communicated to recipient. That means it should reflect in 2A, 2B, only then credit can be claimed. Very interesting point. Yeah, one student question. Sir, 5% is it depreciation? It's not depreciation. That 5% principal is given in law itself. Don't worry. Next. Yeah, this is what is the red flash, what I wanted to show you, my dear friends. You can see how it is coming as red flash for a table 4. You can read out what is written there. Information entered by you is at variance with auto-populated data in table 4B. Input tax credit has been auto-populated on the basis of 2B generated for you. So if you claim more, like this, red flash will come. But you can still alter and proceed to file. But in future, GST department will come up with notices. Next point. This is one new concept, my dear friends, which has come up only for those people where the value of supply is more than 50 lakhs, where they told that, for example, if output tax is 100 rupees, I repeat, output tax is 100, input credit is 110. Will you pay anything through cash ledger? No. When output tax is 100, input credit is 110, use the credit completely over. But one new notification and rule 86B, what they brought is that even though you can use full credit, we want you to use only 99% credit. Balance 1%, please pay using cash ledger. Government is not having funds. Please pay at least 1% using cash ledger. Like this, they are asking or requesting or demanding, whatever you call it. See that? It implies that applicable registered persons cannot use ITC in excess of 99% of output tax liability. In simple words, more than 99% of output tax liability cannot be discharged using input tax credit. But one point you have to see here, this rule is applicable to registered persons having taxable value of supply other than exempted and zero rated in a month, which is more than 50 lakhs. So if the taxable value of supply is more than 50 lakhs, only to them this rule is applicable. That is 99% only you can use. 1% you have to pay using cash ledger. This limit has to be checked every month before filing each return. See one example here. Rao and Sham has output tax liability of 18,000 IGST for the month of May. Available amount in credit ledger is 20,000. Can I use full credit? Answer is yes. But the problem is, in terms of restriction imposed by 86B, Rao and Sham can only discharge 99% of output tax liability from amount available in credit ledger. However, it has to mandatorily discharge the balance 1% of output tax liability 1800 through cash ledger only. This is the interesting point. So this story we have to check on every monthly basis, no doubt about it. So 50 lakhs in each month, obviously 50 lakhs in each month. That's a doubt which is clarified. Next, exceptions. In some cases, the story of 1% will not apply, my dear friends. What is that? If the persons mentioned are as follows. Yeah, 1 second. Just give me 2 more minutes, we'll complete this. If the persons mentioned below have paid more than 1 lakh as income tax under Income Tax Act, if they have paid more than 1 lakh income tax, then law is telling no problem, we will not apply this 1% rule to you. Registered person, proprietor, karta or MD of registered person, any of the partners or whole-time directors or any other person as the case may be. Next point, if the registered person under concern has received a refund of amount greater than 1 lakh in the preceding financial year on account of export and annuity or due to inverted tax structure. Next, if the registered person under concern has discharged his tax liability towards output tax by electronic cash ledger for an amount in excess of 1% cumulatively of the total output tax liability up to the said month in the current financial year. Finally, if the registered person under concern is any of the following, that is government department, public sector undertaking, local authority, statutory authority. So for this category of persons, this concept of 1%, that is Rule 86B, will not apply. Clear? The whole idea of 86B is very clear that government wants 1% through cash ledger. They are having shortage of funds. That's why they're bringing all these concepts, telling that you should not use credit. In fact, one of my clients argued with me like anything, telling that why I should use only 99%. When I have full credit, why only 99%? Why not full? I told him, sir, this is the rule which you have to follow. What can I do? What can you do? My duty is to tell you. Your duty is to follow. Choice is yours. As simple as that. That is a story related to 86B, and that is a concept related for today's discussion pertaining to 2A, 2B, as well as GSTR 3B. Very interesting area, and of course, very practical area, which is very useful for all of you guys.
Thank you, Shivteja sir, for your excellent deliberation by going deep insights into the topic. Thank you so much.
Thank you.
And your chat box is filled with a flood of queries, but you handled in an excellent way. That is very great thing on your part, sir. Along with the explanation about the subject also. Thank you so much.
Thank you so much, man. Thank you.
And I thank all the students for joining the program. Students, actually, you have requested for WhatsApp group. For ARS students, we have WhatsApp group, but for other students who have paid independently, we generally don't create the group, but we mail the PPTs through mail. But as requested by you, I'll already inform to the branch staff to create the WhatsApp group for other students also. Definitely, we will create that group, and after that, we will post all the PPTs in that group. Thank you. Thank you, one and all. Tomorrow, sir is going to deal with 9 and 9C, which is very important topic. Please join for that.
Yeah, one point to add there. We have not covered GSTR 4 earlier. So that's there because I wanted to cover that in annual return. So tomorrow we'll talk about GSTR 4 and then 9 and 9C also will cover. Okay. So that's the last discussion for tomorrow.
Okay. Thank you.
Yeah. Thank you so much.
Thank you.
Bye-bye. Thank you.